Harris, I know it's early out there in Houston. Thank you very much for joining us. Tell us exactly what some of these companies in the Permian, the Bakken, and the Eagle Ford Shale are beginning to do.
Brian, the thirst for capital is immense when you're drilling wells that cost $10 million each. The equities are down. You can't issue equities. It's hard to issue debt. So they've taken to monetizing some of their existing producing reserves.
Okay. Is it a sign of desperation because there's few or no other options, or is it simply maybe a better option to issuing debt at perhaps a much higher interest rate?
I think it's a better option at this point, Brian. There's no doubt that a lot of the industry is terribly over-levered, which reduces your options in terms of access to capital.
How bad are some of these balance sheets, Harrison?
They're pretty bad. They're historically bad, and I think the equities reflect that. There's not a lot of love for our industry on Wall Street at the moment, I'm afraid.
I was going through some companies' debt issuances last night, some of the hardest hit companies, the Whitings, the Oasises of the world, if you know, and they've all got debt coming next year or 2021, usually around 5 to 7%, double B minus credit rating. Are they going to be able to refinance that debt if they have to?
You know, Brian, I think they will, but the question is, what kind of price are they going to pay? There's always a market, but the market may not be the friendliest, and securitizing some of their reserves may be a very viable option.
Because many of these companies refinanced in 2016 when they could, and now that refinance, which sort of took it off the headlines for a couple of years, is coming due.
Absolutely correct.
Okay, now these shale bonds, Harrison, so and if I'm wrong, please correct me, is that you're basically transferring semi-ownership of physical wells. So if those bonds are ultimately not paid off, companies are going to lose physical control of their assets, are they not?
They've really lost physical control of part of their assets when, in effect, they sell the reserves that back the bond. So
they already have lost it.
They have lost those reserves. Now, they generally retain part of those reserves themselves if they're the operator of the wells. Sometimes they're what we call non-op. So you're selling interest in a well that somebody else physically operates and owns a piece of. So you've lost control of that when you put it in that bond structure.
Well, one man's trash is another man's treasure. Harrison, for those our viewers out there that maybe are thinking about getting into this market, what kind of return can people make on these shale bonds?
Right now, there's only one issue that I'm aware of, and they say it's private, and they say that the coupon on it is around 6%. I would think that you ought to be able to attain yields in the, I would hope, 6 to perhaps 8% range if done appropriately.